Hello everybody, we are live. Today we're doing a very special video where we take the time with my developer, A Cat with Charts, to discuss some of the new indicators and products we intend to be releasing in the near future. So, Cat, why don't you take a moment to introduce yourself and tell us what exactly we have to expect with this beautiful new chart template you've come out with.
Hi, so I'm A Cat with Charts. I make the indicators. If you ask indicator support questions in the Discord chat, especially right now during the stream, you might even get them answered. But that's further along. Today I'm here in part because I'm ready to release ACAT, which is a backronym which stands for Adaptive Comprehensive Average Tracker. Kind of lame, but it's basically just saying that compression MA and mean reversion MA are now rolled into the same indicator. At the higher period lengths, it will load a bit faster as part of the creative problem solving I had to do to actually get that to work in PineScript. It turns out there is a 1,000 variable limit in PineScript, in case you were ever curious. And it's pretty easy to get past that when you try to serially scan periods every bar. So I've sent DadShark 4 demo templates to walk through some of the features. If you've been using the more recent versions of mean reversion MA and compression MA, you've already seen some of these features appear, but they're features that have all gotten added since the original videos I put out on YouTube when the indicators got released. So now would be a great time to kind of show everybody what this can do, why it's cool, and why I was proud enough to put my name on it.
Beautiful, beautiful. So, I am going to load up 3D Wave PM as well, if you do recommend so, just as a reference for first of all, the period tracker, right?
You can do that, and if you'd like, you can also merge it with the same box as the period tracker.
Beautiful. No, I like to keep them separate just for a moment so we can have them as their own standalone things, so we can better understand what each of them does. And probably should have put some forethought into that on my part, because load times are aggressive, to say the least. But you managed to make them work, and I think that's more impressive than a good load time. So, Kat, why don't you go ahead and start by telling us what each of these colored lines represent? The light pink, the dark pink, the blue, and the orange.
Okay, so let's start by just saying what you're even looking at. So this is the 4-hour chart for BTC USD. And this is roughly the picture you would get if you loaded the 600 max versions of mean reversion moving average and compressive moving average on your charts right now. Also, to turn on the track current compression option to get the green outlines in addition to the red ones. So what's being displayed are 3 different things it's tracking. And I picked a chart that intentionally shows some of the pitfalls of the current 600 max version. The blue bands are the mean reversion MA bands with 1.25 standard deviation bands. The red is compression MA at the highest tracked period, where it will continue tracking a period. And then the light green are where it's tracking the current most compressed period and just highlighting whatever that is, if there is a compressed period.
Right, and this is we're talking about the bottom of the volatility overhead. That's correct?
Yes. So in the one you've highlighted there, that would be pretty close to 600 periods. So that's going to be the pink line moving up on the period tracker. But you'll notice that I picked a chart where mean reversion moving average maxes out, so it gives you the orange maxed out color change, but also one where compression moving average maxes out at 600 max, which is not actually very common. It's really uncommon on most charts unless you use really small time frames to get all the way to 600 period compressed.
Right. So this beautiful pink line right here, and I wish it drew lines, it's not. When it turns blue, you're saying that's when the volatility overhead fully radiates up above the 600 period?
Yep. I'm saying that. It's saying that it's seeing a compression period that's at 600 or higher at that moment. Well, specifically, the tracked version got to 600, so it's continuing to track. Mm-hmm. It's not seeing a current compression MMA. It's radiated to 600. Otherwise, it would have the green one going off. But it's a reasonable assumption that there probably is one radiating to higher period length, since we were still compressing over there. But in any case, the purpose of this first demo is to show how I've worked around this and stitched together two indicators in order to solve this whole it maxes out problem and probably not break PineScript in the process. Because if you've used the full-length versions of mean reversion moving average and compressive moving average that go to 2000 period, what you'll notice really quickly is they tend to crash a lot. It's very tough on PineScript to actually do long loop calculations all the way out to 2000 period. But one of the clever workarounds, the big key clever workaround I had to do to actually get both of these things working in the same indicator without maxing out the number of variables, was to just split it into two different indicators and add an option in the settings menu. So if you would open that up on the cat indicator. So in this first menu that says behavior with max period reached, change that to hide until tracking resets. And then turn on the indicator below it. So hit OK. And then do the same for the period tracker.
Excellent. So what exactly are we doing here, Kat?
So
hide until tracker resets, yes?
Yeah. Yep. So eventually the longer period length will load, and it'll probably take almost a minute. You can immediately see that the shorter period length has, and you could probably zoom out a bit to show what this looks like. So now when it gets to 600 period, it just stops displaying what was going on and what it's tracking. So instead of giving you an incorrect signal, it gives you no signal. Now, what will happen is the higher period length, when it loads, will just magically extend the correctly tracked period length, and it'll look really cool.
When it loads, that is.
Yes. I do hope you preloaded the other demos and other tabs.
I didn't want to risk loading up more than one chart template at a time, since, I can already cook on my computer anyway.
This will be fun, and there'll be a little bit of waiting, but it will be worth it. Okay, so you can zoom out now because it's loaded. And what I'd like to do is move the scale a little bit so that you can see that this is tracking all the way from the November drop now. So you can see a bit of a gap function change right when it does the overexpansion that hides the first set of indicator and then starts tracking on the higher period lengths. You'll also notice, if you're paying close attention, that compression MA also started tracking further out. And it started tracking in certain places, indeed, that we were still had active compression overhead, as denoted by the green bands, further on than it was previously, since compression was happening above 600 period.
Beautiful. So anything below this beautiful mass generation right through here is represented by the green bands, whereas the actual mass generation itself is represented by this beautiful blue band. And Kat, just so we're all on the same page, can you explain what this beautiful red band is here?
So this is the tracked compression period. So whatever the highest period is, when it no longer detects a compressed period. So every single period it's looking at is above the 0.4 value by default. You can actually change that in the settings menu. I don't know why you would, but I tend to make variables that are technically variables into things that people could mess with if they wanted to. But when it detects nothing that's below that anymore, whatever the last compressed period it was, it tracks. And what you'll find is that this acts like a pivot similar to the longest overexpanded period. It's not as clean, and there's a rational reason for that, in that the normalization process is going to be more effective at catching an overexpansion than exact compression pivot. But this allows you have multiple bands and see sort of a short time frame set of pivots and a longer time frame set of pivots without having to constantly shift between different time frames. And I found that it's incredibly helpful to have some explanation on the chart
Instead of just true net expansion all happening in the same direction while you're tagging the 3.2 standard deviation on the downside. Yeah. Absolutely. When you're dealing with those kinds of extremes in true net expansion, having some kind of benchmark is going to be incredibly useful, since when you're no longer in a defined range and you're getting, say, I'm going to load up quad CCI just so we can get a good understanding of this. My scripts, wow, okay. Right, so fun enough, this red band is actually going to show up when you're getting these huge red plumes of mass, which on the CCI means every single CCI period is weighted to the downside, which means every single period of Bollinger Band is below the 1.25 standard deviation. So this kind of true net expansion is going to take away the effectiveness of, say, this pivot up here, right? If we know this up here is the mean reversion pivot, you're going to want at least some kind of benchmark to be able to track how trend is performing when you're dealing with extreme values.
Yeah. And then to dive into the green band. So this is possibly one of the most powerful things any of these indicators actually do. Because it's not necessarily the quickest way to determine that there's a range, but it's a very good way of determining with pretty high confidence that it's currently trading in a range. And it is rare, really quite rare, that it simply gets out of that range without bouncing around, tagging the edges of the distribution several times before it actually does so. I wouldn't say that I have the greatest way of figuring out and predicting when that point is actually going to be. It, to some extent, depends on when someone's willing to actually start applying volume to do so.
You're not exactly weatherman.
Yeah.
Predicting when it's going to rain is not as important as predicting that it will.
Yeah. But this might actually be a good point to load up the second demo.
Beautiful. And I'm going to save this as is because it looks cool. And we're going to dive into Cat's DMs. Demo 2 copy. And we're going to close the previous template, otherwise my computer will die. All right, Kat, while this loads in, go ahead and tell us a little bit about it.
So, for this, it would be useful to open the settings menu again to demonstrate what's actually going on here. So you'll notice that there are, for each band that can be displayed, actually 4 different checkboxes. The first one turns on the average centerline display, and you need to check any of the bands to display. But you can actually display up to 3 bands instead of just 1, which was a relatively recent addition that's on the live versions of Universion-MA and Compression-MA. So it turns out that the 2.2 and 3.2 standard deviations of these otherwise important periods also tend to be important pivots, particularly the 3.2, and I'd say particularly for compression on shorter time frames. 2.2 on higher time frames, you can see with Bitcoin, seems to be quite relevant. For Universion-MA, I'd say 3.2 standard deviation tags are pretty important, pretty reliable as places to at least consider a hedge or an exit of a current position, or an entry of a new one. It's hard to push a longest overexpanded period all the way past the 3.2 standard deviation, which makes sense.
Right, and if this is a bit too much for all of you watching, think about it like this. We are normalizing overbought and oversold values by using volatility overhead. So extreme values that are in the 99.7th deviation third standard deviation, right? When you're getting those extreme values, this normalizes those extreme values, or normalizes the period of the extreme values. So instead of it being an arbitrary period you chose to define, say, the 3.2 standard deviation, well, now I'm just getting repetitious, it's standardized. And Kat, why don't you go ahead and tell us a little bit how the period tracker affects this chart as well.
What do you mean by that?
Say, if someone wanted to load Bollinger Bands manually, just using the period tracker, what would be the best way for them to read this data?
So they should go to the scale, go to labels, and turn indicator last value labels on.
Oh my. Slow down there. Which setting menu am I opening?
Go to the scale.
Right here?
Yep. Go to labels, turn indicator last value on.
Oh, beautiful. So this allows us to see the current value for each one of these lines. All right. So I'm going to load up some regular Bollinger Bands. Now, let's go ahead and load up a Bollinger Band for each one of these current periods, yeah?
Yeah, and you might want to do one for the 1740 period as well, which is that one that's we mean reverted to.
Okay. I'm going to open up an instance of
BBeomics Lite.
Beautiful. Excellent. So, based on these 3 readings down here, or 4 readings, tell me which periods I should be loading up here.
140, 605, 815, and 1740.
605, 118 you said?
815.
815, yeah. 815, I could have just read it myself. And what was the last one?
1740. And those last 2 periods you want to set to 1.25 standard deviation.
Beautiful. Okay. So let's talk about what each of these pivots means. Let's first talk about our pink band. How would someone use the pink band, which is currently set to... I'm sorry, I'm a little unfamiliar with my color scheme here. So 1740 is the longest over expansion. Let's just do a little quick check. I think it's the blue one. Perfect.
Yeah.
Let's do it one at a time so we don't lose our minds. Okay. So this pink line up here is our longest over expanded period. When it's re-entered, it heavily implies reversion to the relative mean, which this is actually where we confirmed our market bottom on February 18th. If you feel like going through my TradingView ideas, at this location is where we called that mean reversion. And this darker pink line here, right, Cap? That's the 815 period. Let's talk about that Bollinger Band. How would someone use the 815?
So the 815 is your tracked longest compressed period. And as a practical matter, Bitcoin is really far above its pivots for mean reversion. In fact, one of the reasons it's nice to actually have the tracking on and to look at the same picture is the highest compression it's currently under. You're starting to see the bands of that encompass where the mean reversion pivots are. So it's becoming a reasonable proposition that if Bitcoin starts falling like a knife, it is not going to be stopped by the compression, because it's all entirely within that compressed range. And it probably will stop for a temporary bounce or a meaningful bounce when it actually hits one of these pivots for mean reversion down. It would be to about 4,000 at this point. At the moment, Bitcoin is roughly traveling along the 2.2 standard deviation on the longest overexpanded period. So I've got the pivot for mean reversion on that period at 4,800 and the longest compressed period at 4,700. In this particular case, the longest compressed period that's being tracked is a bit longer than the longest pivot that's been overexpanded, which is a little counterintuitive, but it's basically saying that there's compression overhead from before we mean reverted to the November period length, and the overexpansion that cost us to mean revert was up to about the 605 period itself. So there's actually compression overhead over the 605 period, or was compression overhead. It would have radiated to the 815 period, and that defines a likely set of pivots itself. If we were to go farther from or otherwise ignore specific pivots to retrace the move up to the 5500s. And it's a useful observation just to say this about mean reversion MA in general, especially in crypto, where things like to make very large, massive moves. You'll see a lot of instances where you'll get this BART style move to mean revert, and that move itself will trigger a mean reversion in the other direction. And on a higher time frame, what then happens is you see effective compression, where you first mean revert to one direction, and then you mean revert to another direction that's a partial retrace of that first move.
Right. If we were to go on a lower time frame, I'm specifically thinking of this example, we would get similar results. That was the entire thought. Yeah. Beautiful. And
so,
go ahead, Kat.
We could keep going through the periods, but I think you're going to find is that except for that smallest one, 140, Bitcoin's significantly above the 1.2 size standard deviation of those. So the 140, let's just check that one.
Okay. And this is our compression overhead, yes?
Yes.
Beautiful. So what this means is we don't expect expansion outside of these values, right?
Yeah. Now it's worth looking at that period tracker for a second and noticing that the current compression is not a static value. That's part of the magic of why it works and why it shows something about ranging so well that, as far as I know, I've not seen another indicator that does. Whereas overexpansion gets to a certain point, defines kind of an exact pivot, more or less. Compression is the absence of something, in as far as volatility is concerned. It's sort of like the comparison would be like cold and hot. Cold isn't actually a thing; it's the absence of heat. Light
black
and dark
implies white implies black.
Yeah. But the absence of something can continue on forever. The presence of something is a distinct measurable value. So the absence of volatility can lead to a rising compression overhead.
Kat, I actually have one question personally that I'd like to bring up. And I think I can merge these to prove my point. I have to right click on the actual indicator. Come on. Move to existing pane above. Okay. I didn't do that right, did I?
You then have to go into the scale, right click it, and merge the scales.
On the left?
Merge on the right.
Okay, beautiful.
Yeah.
So, and then
this used to be really a pain in the butt to do, and then at some point, TradingView redid how they do scales, and now it's just like one click.
Actually, I have a big problem. When I'm creating my TradingView ideas, okay, never mind. I can just do that. They fixed it. That's good. For about like 2 weeks, you weren't able to move scales from left to right, and it absolutely killed my productivity. But I have one really big question. And why are we defining volatility overhead on values below 0.4 instead of below 0.7?
Well, for one, the compression pivots do work. As a practical matter, getting below 0.4 is really compressed. The band's basically doing nothing in its cycling at that point. It is narrowing quite a bit. And that's kind of what you're trying to define with compression MA, is the idea that something it's so compressed that it's going to take a fair amount of effort to expand volatility on that period. So it's going to actually be a significant resistance to doing anything quickly.
So I think, trying to find a good example. Okay. So typically when I describe volatility overhead, I say if we have reached the 0.9 value, we must go below the 0.7 value before we can return to above the 0.9 value. And I think with the way we currently have compression MA set, is we're saying price must go below the 0.4 value before it can go back up to the 0.9 value.
I wouldn't necessarily say that. What I'd say is that it's trying to define a period length that is going to be substantially difficult for price to break anytime soon. Hence, it's a set of resistances instead of pivots. And cycling is not a quick process on a long period length. If you have, as Bitcoin had, compression up to 600 something period, well, that's 600 something bars, and it is, even when significant volume is applied, there are several plumes underneath that. It took months before it was actually easy to break this. And it makes a certain amount of sense when you consider what is trying to reverse the momentum, reverse the volatility and trend of a move as strong as November. It should take a long time to actually break through and force the cycling for the next trend movement at that long of a period length.
So you're defining volatility overhead as the bottom of the blue rather than the bottom, or the bottom of the green rather than the bottom of the yellow, which honestly, if we're being honest, is a really thin difference and shouldn't make that much of a point, just because of how quickly price manages to, well, radiate, right? So if we're gonna zoom really close here. If we have, right, if we're defining the compressed, or if we're defining volatility overhead, right, by using the 0.4 value, right, on this candle, right, it's going to be a difference between 80 and 90, which honestly is a really small difference. And for the amount of, like, it's one, or let's find out how many bars. 1, 2, 3, 4 bars. It's only a 4-bar difference until the difference of the volatility overheads will reach the same reading, or rather.
I will say there is also a technical issue here, which is that for the purposes of algorithmically detecting compression, it's going to be way easier to exclude everything that isn't really compressed and actually have it identify something useful than to say anywhere where it's green and the entire map is a period high enough that it should be a period it should be considering tracking.
Right. Um, I think it's just going to boil down to where you want to define sufficiently compressed to restart trend, right? Since one of the biggest problems I had when developing my strategy around volatility overhead is the single most consistent thing for me was the cyclical nature of compression periods, where one of the things I can bet on more than anything is that if we are above 0.9, we will not go above 0.9 again until we're below 0.7. And I think, personally, with how I define volatility overhead, saying this must go below here before we can return here is, well, we might even just be measuring different things, huh?
Yeah.
Right. Wow. I just guess readings below 0.4 are so rare that we could actually... Ooh. Well, perhaps we could even define further trend prediction for periods.
So, lest we get incredibly sidetracked as two ADHD people who didn't actually make a bullet point list and just have demos to work through, let's probably focus on the demos and theory craft on another stream.
I'm having way too much fun, Kat. I swear to God. Just agree with me. Okay. Actually, I'm going to take a quick look at the YouTube comments before we move on to the next chart template, if you don't mind, just to see if anyone has any burning questions.
There is also one other thing I want to show on this template.
Sure.
So if you'll click to turn on a CAT 14 2000 half res.
Should I hide the other one?
No, actually turn it on all three at the same time, actually.
Oh boy.
So trying to think of various ways I could use the newfound powers of stitching together indicators that
previously timed
varied
out.
the amount of previously timed out and varied the amount of period lengths. Like, I asked the question of, okay, I can't actually get PineScript to let me put at the same resolution everything mean reversion MA did and compression MA did in one indicator. But it would be really nice if I could find a pretty good balance where I could just have one indicator that did load up reliably almost every single time, but had that full length. And after some tinkering and trying a few things out, empirically I came to just roughly cutting the resolution in half was good enough to get it to load most of the time. Now, that said, before I tell everybody, hey, just use the half res version, it's going to work exactly the same way and just load more reliably, I think it's worth kind of zooming out here for a sec and notice. I'm gonna zoom out the scale a little bit so it's easier to see. It does have some cost to lowering the resolution, and that particularly the compression tracking for the current most compressed period, because in that case you're tracking a dynamic moving average. If you have lower resolution so that it's a more infrequent step function check of which period it's actually tracking, you get this really bad jigsaw pattern at your actual pivots that becomes really pronounced. So that's a pretty big trade-off. I mean, with a perfect resolution down to the period, that should be a pretty tight line. But what's actually happening is it's identifying a higher and higher period, but it's doing it in gaps of wider numbers of moving averages, so it tracks the next one unless a jigsaw and so forth. The other thing is that the exact period will be a little bit different in some cases. Sometimes it'll count one the same one. Sometimes it'll be a slightly different one that the higher resolution would have identified. And I do find, anecdotally, especially poking around on short period lengths, that the higher resolution one, when they differ, is better respected. So there is some precision loss. For quick and dirty use that's not going to frustrate you. The half resolution is going to be easier for people to just load up and use. And the general plan with the ACAT indicators is that they're going to supersede and deprecate existing mean reversion MA and compression MA indicators. I'll say if you're already subscribed to those, I'll leave you with access to those, and and grandfather you into having access to the older ones if you still want to use them while you're subscribed. But going forward, I'm going to support ACAT instead, since it's better and newer. And we'll make the full version, a full indicator subscription tier will have access to the 14 to 600 to 600 to 2000 and the 14 to 2000 half res. And I've got a treat for the full plus experimental subscribers on the last demo. But that's the last thing I want to show on this demo. Let's go to the third demo.
Beautiful. I actually have one question myself. It's brief. Do you notice how we actually get the correct volatility overhead reading here, but this one gets ignored? Is there any specific reason for that?
Because there's a radiating compression that happens to be actually reading is compression above that one.
Okay.
So there you're getting an issue where it's that radiating compression is up in there, the 600 period is like right around the 0.4 value, and it's sort of in or it isn't, and it's flickering.
Beautiful. So I guess for all of you watching, my only recommendation is making sure you also have 3D Wave PM loaded up with this. So just in case you get an instance.
I will say, by having the compression attract period loaded up at the same time as the current compressed, the highest compressed track period will generally be stitching together the local highest compressed periods, unless for some reason the highest compressed period is tracking something that's way above. And when you get cases when there are several things you could be tracking at the same time in any given area, that's just a general limitation of trying to algorithmically track within PineScript, where even if I wanted to try to come up with a clever way to track the stuff under the stuff, that would take way too many variables.
Absolutely. And yeah, my recommendation is just to have a second or an instance of 3D Wave PM so you can check when those kind of shenanigans are happening.
So you should load up Demo 3. This one's a little bit different, and I think you'll appreciate it.
Yeah, actually, I had a conversation with one of my students, Penn, and he was trading some 5-minute Forex charts with just the default setting mean reversion MA, and he was taking the longest overexpanded period of plumes of mass just by what mean reversion MA was generating, instead of checking to see if there was volatility overhead manually.
Yep, and in most cases that'll work, but I'll caveat most, and I explain this with some examples in the mean reversion MA video. There is a limitation that when you're tracking one period, it will track one period and will miss if there's something else going on at that same time.
Okay, almost loaded here. So, Kat, tell us a little bit about what's happening here.
So this is the current 15-minute chart for Ethereum. So I thought, well, let's go instead of just macro charts. Let's look at what it looks like when you actually blow this up on a shorter time frame. Because by God, if you just try to swing trade something like Ethereum or Bitcoin very carefully on like a 15-minute chart with scalps and looked for things like tags of 3.2 standard deviation as your entries. Like, I'm pretty impressed by this.
That's one of the best entries I can see, especially combined with the overexpanded wave PM cross.
But just like look at that over the past few days. Now, you were constrained by the fact that you have to be doing this on a period or a time frame where these scalps are actually going to be worth taking, worth the risk. They're going to beat fees. That's the problem with trying to do it on something like the 1 minute. Like, yeah, it'll follow pretty beautifully and make the same basic patterns because volatility is, a set of interlocking cyclical periods that do the same thing as a fundamental property, just going on to longer and longer. But whether that's going to make sense as a trading strategy, it's going to depend on whether risk reward is there, including accounting for the fees and actual liquidity on the order book. On lower time frames, you're going to have a hard time actually justifying that.
I want to try something, just for me. Don't let me get too sidetracked, Kat.
I'm going to guess that this will start tracking just a very large period once it actually loads. But I'll admit I've not tried this.
It's just a hunch. I'm going to have to do a lot of back testing with it, but I just have to see how it performs on the way I've been using volatility overhead thus far. Yeah, that's a significant difference. And I'd like to do the same with the period tracker as well. Oh, but that's really nice.
Yeah, so it's definitely not a useless set of bands. But you can see how where I get wary is when you just start putting lots and lots of lines on charts.
Eventually, some of them.
Eventually becomes easy to say, well, it makes sense that it bounces here. It makes sense that it bounces here. It makes sense that it bounces here. And that may be true, but you've actually got to have relatively few enough that you can reasonably predict which ones are worth taking as entries.
See, also Fibonacci. Beautiful. Okay. What else you got for us, Kat?
So I would set that back to 0.4, just for the sake of the example. I would point out that at this particular moment, it is telling us that mean reversion on Ethereum to about 170 is probably implied on the 15-minute chart, which I want to say on the 4-hour would be viable.
I see it.
But it's also going to depend a lot on whether volume sustains this. There was a fair amount of mass on the shorter periods created by the drop about 18 hours ago. But we have actually on the 4-hour finally worked off the compression. So we could see the 4-hour just predominate at this point going forward. Another thing to look at would just be to load up the 15-minute chart on BTC USD. For the sake of saying that I didn't necessarily cherry pick one particular chart. These pivots are generally good and useful anywhere, any chart that's volatile enough to generate them. Anecdotally, I would say cryptos are always great for volatile stuff with no FA that gets in the way. Random commodities, I think, are probably worth looking at. Forex charts. Equities are a little dicier because of a lot of reasons, including the futures interacting with cash market, and they don't trade necessarily on the same hours of the day. So there's a time application. There's just a lot of derivatives in that market and a lot of fundamentals that actually matter. So
fundamentals that matter, something that I've actively avoided for the last 2 years.
Like it gets tricky. It would be cool if I get to a point where I'm satisfied that it works well, because at least in that market there are very good instruments for buying or selling volatility itself, which there aren't in crypto. But sidetrack aside, we look at the 15-minute chart on BTC USD. We can see similarly clean following of the various sets of bands, 3.2 standard deviation being a pretty good entry signal in most places. On the higher time frames, like the 4-hour 2.2 on compression in particular, is often at least a good place to consider take profits or an entry. Often you'll get wicks in crypto that go to the 3.2, and then the candle will actually close around the 2.2.
Yeah, it's
that kind of thing.
Pretty much due to the low liquidity.
Yeah. But what makes the whole volatility stuff magical is that the reason it works fundamentally is it's just hard, no matter what the market participants are, to move price past certain points without a crap ton of volume. And especially on charts which people don't really trade but are liquid and derivative arbitrage markets, XRP ETH is a good one. My God, the pivots follow wonderfully.
Let's check it out.
Yeah, I'll look that one up on the 4-hour. I want to say is a good one. 4-hour, even the daily. Let's start with the 4-hour, and I would focus in on this part where it's been systematically crashing, where it just repeatedly goes to either the compression mean or the longest overextended mean. It has, if it closes the candles across those means, it would be resetting it, and it's not. It's specifically testing those, closing below them, often wicking to them or right to above them, but closing below them. And trend continues reliably after it does this test, because it can't cross these means. And it just goes parabolic. It tracks, it pounces repeatedly right around the point when it's starting to cross 3.2 standard deviations. It tracks when it compresses, the compression pivots.
It's really cool that once compression actually begins, just how neatly it defines the range.
Yeah, but what's nice about this chart is nobody trades XRP ETH as a primary pair. This is relatively liquid, but it's all arbitrage and Binance. So it's just doing what the distributions say should be the liquidity constraints.
Wow. Yeah, it's really clean. And then it's interesting to see that once you actually get the net expansion firing off for trend, how quickly your compressed range breaks off and allows for the trend to continue.
Yeah. So demo 4 is the treat that I'll have for release for the full plus experimental subscribers.
Beautiful. So what's happening here, Kat?
So let's give a second to load.
I actually have to do it again.
So you zoom out the scale. So the point of this exercise is to say that, man, ETHUSD expanded so far in the 4 hour that it maxes out 2000 period. It's actually quite difficult to get a good reading of what the longest overexpanded period on Ethereum is.
Right. Just to point out what that means, the downtrend for Ethereum was so strong that the amount of mass generated can't be read by the highest period version of this indicator.
Well, not quite. So you'll notice that on this demo, there's in a cat 2000 to 4000. So if you'll go into the settings menu for 600 to 2000 and switch the behavior to hide when it gets maxed out.
This one?
Yeah. The first menu, change the display behavior to hide until tracking resets.
Beautiful.
And then turn on 2000 to 4000, which looks like you already did. And you can do the same for the period tracker.
Oh, that one's already set correctly? Oh, that's the wrong period. There we are.
So on this chart, you now get a reading.
Beautiful.
In this case, that reading is... I'll turn on the labels on my own. 2675. I will say to get the 2000 to 4000 to work, it is a little more granular resolution than the other versions, though at that length, it more granular. You can have bigger changes in your moving average to get the same approximate percent difference what the moving averages would say. And here it would say that someday Ethereum will probably get to this 2675 average. Yeah, and if Ethereum just goes parabolic here, which I would say is probably unlikely given what's going on with ETHBTC at the moment. But if it were, you would probably pick 348 as a mean reversion target. Now, a good exercise would be to set this to the daily, because I think you'll find something else quite cool about where we stopped. You move the indicator to that window. Just set it back up to the window above.
Oh boy. Okay. Well done.
So if you just zoom in to where that pink line is. Yeah, so we're not kidding when we say that higher time frames tend to dominate when there's any kind of conflict. Ethereum on the daily is compressing. Obviously, like just look at the chart over the past year and what it's doing now after dying for the whole year is it is compressing. That compression range is relatively massive. Like it spans right now all the way from 81 to 286. But by God, the mean of it has now placed 1, 2, 3, 4. I see 4 wicks and the start candle body all touching it exactly. And it's acted as the hard resistance so far on now 2 different runs at it. I'll admit that I was kind of expecting that given the movement in Bitcoin, we might actually break through, and that would set up a very, very nice implied move on the daily all the way to mean reversion. But it's actually you see on quite a few shitcoins on the daily chart as these huge compression ranges, and the compression mean pivot to get to it, and a lot of them will stop there.
I am pretty sure a lot of the viewers are wondering why this pink line just happens to provide such strong resistance.
Well, it is the center of the distribution that represents the largest amount of compression.
That'll do.
This is on that period. We are compressing tightly. Like we are in the part of the weight of the cycling of Bollinger Bands where it's getting tighter, and as a result, if there's no energy, no force to move it anywhere, the easiest place for it to go, and it's just the center of that distribution. And actually crossing it to change trend is going to be quite difficult without ranging quite a lot while in it. Now, when you have a compression band that's all the way from 286 to 80, you can trade the lower time frames. There is enough space for this thing to move. This thing will literally halve and double, probably several times before it actually breaks that compression. So it's not, in some ways, not the most. In some ways, it's an incredibly useful observation to say that this is a hard barrier that is having difficulty getting through. But it's also, in some ways, so large of a time frame that it's not a useful thing to know as far as trading it on the time scales we actually place trades. It's a good place for you to expect things to stop and to sell the top, but mostly you're going to be trading the stuff that's happening underneath this very long thing that's going to get resolved over the course probably of a year.
Absolutely. I have to say, I'm pretty interested about what's about to happen on this pivot here, just as far as me actually wanting to trade something. But it's kind of interesting because on the BTC USD pair, we're really close to the mean reversion pivot, and if that crosses, it'll be confluence with this rejection from, this new downward expansion. And, if we actually enter the mean reversion pivot to the downside on FBTC, I might as well just take the short on FUSD. So if anyone's actually made it this far into the video, congratulations. Yeah. I'm very interested in shorting this to potentially maybe 50% profit. Who knows?
Yeah. So if you go back to the 15-minute, I would point out that it is just back tested and 2 different bars in the past few. The pivot for mean reversion and held it. So I would say that there's a decent chance it's going to come up to this 170 price. And I'm also saying that because my memory of looking at the 4-hour chart recently is that's somewhere where the top of the band for the containment zone for mean reversion downward currently sits. So somewhere around 170 is where if this continues up just slowly towards mean reversion, there should be a confluent resistance there. So unless we see Bitcoin just do some crazy exit pump type thing, I'm also thinking at this moment that whatever chance Ethereum had to break out has been squandered. ETH BTC is now doing what XRP BTC has been doing for months, and I would not be surprised to see ETH BTC fall. It's a scenario similar to what happened in July. You actually called the ETH BTC decline there as well, where alts dumped before Bitcoin did proper, or faster than Bitcoin did, and then they started finding temporary support, and Bitcoin tends to do the last part of the movement last after alts have already done it.
Mm-hmm. They can be a good precursor, though. It's hard to be more reliable in that kind of generic direction.
Yeah, so I'm looking at this 15-minute chart, and I'm thinking either a new CCI expansion out of over 100, or if it cycles fully, there's a roll-up, is your classic mean reversion, except in this case it's a scalp of just a few percent, which is cool. But it's a scalp, and it's mostly I'm really interested in possibly shorting that pivot unless we're just seeing a bunch of massive volume to cross it.
I'm getting excited. I've been waiting for this market-wide dump for how many weeks now? Goodness. I
mean, if it makes you feel better, I've been waiting for Bitcoin to pump out of its compression range for 4 months and finally did.
Oh my god, yeah. You probably did pretty well on that. I'm still salty about not getting my long in the weekly 200. But alas.
Yeah, I kind of looked at the compression range when it hit. It was close to the weekly 200, and depending on which exchange you use, it was like,
oh my god,
50 away or something, and I just said, oh, this is good enough.
This is good enough. It's annoying to miss out on 60% profit unleveraged just because you want to have it dip another $50. And you were saying there, right there, that compression, right, on these pivots, like, hey, it's pretty likely it's going to stay in the range.
And it's worth saying that at the time, the top of the compression range, also the 200 EMA, on the weekly, which you have to use either the BLX or Bitstamp charts to have a long enough look back to get a correct 200 weekly EMA.
I'm sorry.
No, it was
is your text tone the sound of Gladys?
No.
Okay, I never mind. Keep going.
Yeah. So it was defined. We had this compression range. The support was the weekly 200 SMA. The top was the weekly 200 EMA. Like, pick two better institutional benchmarks. It was the easiest range trade that we'll probably get all year.
I don't know. I'm pretty confident that the rejection from the weekly 50 down to the weekly 200 is going to be the best range trade all year.
Yeah. Okay. Well, I won't complain because I'll be with you shorting that one. I was really hoping that Bitcoin would show some strength here, but I'm digressing a bit here. I've had a pet theory for a while that crypto is a good proxy for investors' speculation generally over exuberance, and it tends to pump or dump right before or after equities markets globally do the same thing soon after. And like the Bitcoin dump in December 2017, like a month later, European Asian equities markets dumped, and U.S. equity markets had their first big dump in January 2018. The November dump in Bitcoin happened around the time that the parabolic dump into December happened in U.S. equities, and then Bitcoin pumped. I want to say about a week and a half before Christmas, where it finally found bottom. And Christmas was when U.S. equity markets started their current parabolic advance. So I'm going to looking at all-time high SPX and Nasdaq, and parabola on the Nasdaq is now an all-time high, like MACD histogram, which is to say that on the weekly, which is to say that the length of the parabola, the sustained amount of the parabola, now exceeds the blow-off move in 1999. And like this.
It's a little bit overbought. You could say that unironically.
Yeah. Even if you think that, there's not going to be a recession, economy is generally fine. Markets do range a little bit more than that usually before it's sustainable.
It's really hard to say that there's not going to be a recession when the U.S. debt bubble in 2008 hit the world economy. And yet here we are with the Chinese debt bubble that's 4.5 times the size. And I'm sure it's not a directly relative difference on how bad the recession is going to be when it pops. But it's significantly larger.
It's a bit hard to know, make heads or tails of what's going on in China unless you have access to expensive private information, because you definitely can't trust. And this week, right after the government's China's trying to claim that there's improved manufacturing numbers.
Of course they do. They build
the Chinese
cities.
20 market just had like a 4% down candle. It's the largest daily decline in 6 months. Okay, so clearly someone doesn't buy your bullshit. Clearly someone thinks this is top.
Know what I want to do?
Yeah. So like the market can stay irrational longer than you can stay solvent, which is, it's always hard to short a parabola. But
that's where I'm going with this, man.
Yeah.
It's hard to short a parabola, but what you can do is to bet that a store of value security will perform well against the Chinese economy. This is my like long-term hedge, is betting that gold will do well against the Chinese yuan. Jesus.
I'm surprised there's even an instrument for betting that.
I'm very excited. I'm gonna do it.
It's hard to bet against the yuan specifically because it's not freely floating. I'm not sure that betting against yuan is necessarily the best way to go about it, because you have all sorts of weird, randomly inexplicable government intervention, and like this isn't something that's exclusive to only the yuan. Like there was an issue like a couple weeks ago where the Turkish lira, the Turkish government decided that they were going to try to punish shorters by just banning banks from overnight lending to screw liquidity in the forex markets. And they did, in fact, squeeze shorters in the forex markets, who promptly sold off as many Turkish bond and stock assets to get Turkish lira on the open market to cover their positions. So they caused a giant long squeeze on their equities and bonds.
Oh my god.
Authoritarian governments have a bad track history with managing currencies. Don't politicize your central banks.
I don't know. It's pretty exciting if you ask me. Just kidding. This has been loads of fun. Do you have any closing statements for us, Kat?
I'm going to just look through the YouTube comments and see if there's anything really specific to me that I can answer quickly.
Beautiful.
It looks like the question about why is 600 period significant? It's really not. It's the arbitrary period length. I anecdotally found I could get things to load on in BindScript when I originally coded these indicators. So it's what I use a lot for a max length on the local versions of indicators. It's max period length you'll see on the regular 3D Wave PM, for example. Let's see, anything else? I think we answered, if we look at the current price here with by these new indicators, I walked through that pretty well for a live stream. I guess I don't know if there's any specific questions with the indicators other than that. Maybe some questions about some pairs.
Beautiful. I'm pretty happy with this live stream. I gotta say, if you're interested in learning more about the vocabulary we learned here, I do recommend the lessons, or more cost effectively, tuning into the live streams every day and absorbing it all through osmosis.
And I guess I will say, I'm on the stream today in part because the cat started. So I'm going to be rolling that out probably a couple of days when I can get a long chunk of time. I got to make sure that everyone who's subscribed gets the right level of access and everything. And it takes some time to sort through that and make sure I make no mistakes. So everyone who has the full subscription will get the 3 indicators lengths mentioned, as well as the associated period trackers, and then full plus experimental. I plan on making the 2000 to 4000 period version an exclusive perk to that, alongside the higher resolution 3D Wave PM versions. Because simply put, in most cases, you wouldn't want to use it. It induces lag. In a lot of cases, if you're looking at 2000 to 4000 period, like that's really cool, but what you're actually saying is that you're looking at a time frame that's like a whole tier higher than what you're actually looking at on that chart. So you should probably be looking at that time frame instead. It's like, what is 4,000 4-hour bars? Well, it's like the weekly. So, I expect to get that rolled out to you in the next couple days, sometime before the end of the weekend. I'll make announcements in the Discord when I've done it.
Beautiful. Well, I'm quite satisfied with all this. It has been a beautiful afternoon. I will see all you folks tomorrow at 1 p.m. MST. Have a good one.
All right.